are with Closing Bell, and it's really cooled off. Just about 23, 24 points up on the Nifty. Now, imagine at one point, this index was 23 points away from the all-time high. Now, it's up just about 23 points. And the mid-cap index has also cooled off very, very swiftly. It's retaining a gain of just about 0.25%. So it's really, a not very friendly last 1 hour for the bulls. Mayuresh is still with us. Mayuresh, I'm going to go back to Indus Ind Bank because, again, that stock has had a dream catch-up rally as well. Today, of course, it's subdued. Where would you place it in the pecking order? If it's a buy, then what kind of targets would you expect?
So, Surabhi, again, as Mr. Sopti was mentioning, I think the advances growth is going to be extremely critical for a bank the size of Indus Ind at this point of time. And the alluding point that he was referring to in terms of the 25% advances growth, if one really takes that as a base case scenario for the advances growth that the bank can post, along with strong Tier 1 ratios that it already has, my own sense is that the accretion in terms of the adjusted book value can even be significant from the current levels. The second element obviously is how the asset quality is panning out, and asset quality pressure seems to have stabilized for the bank per se. The third element obviously is the expectations in terms of credit costs, and credit costs are expected to come down. They were a little bit on the higher side. The expectation again largely is the recognition that they probably need to do towards the ILFS account in Q4. But if one adjusts for that, probably assumes stronger loan growth with stable asset quality pressures and costs coming down. My own sense is that the book value accretion should be quite reasonable. The management changes itself. Again, I think that's going to be a defining trend going forward. But at this point of time, I think we continue holding the stock in our funds.
Okay, the other curious stock has been Zee Entertainment. Just pull out that stock. It's now making lows of the day once again, and that one's going down further. 3.5% lower is what you have. Ashwini, your thoughts on this one? Every time it's going to 450, 460, there's a sudden decline which happens, whether it's a strong market or weak market. Okay, don't think Ashwini can hear us. Mitesh, your thoughts on Zee Entertainment?
Yeah, I think Anuj, Zee, after that big decline, bounced back and then now it's trying to settle down, but the overall trend hasn't changed. In fact, today we did have a short recommendation here. I think 425 to 420 are very strong support areas. Maybe around these levels it will stabilize, but I don't think a reversal will happen very soon. More likely, I think what can happen possibly over here is that the stock will just get range bound for some time.
Okay. Mayuresh, I just want to go back to some of the auto names because we've been trying to decipher, whether there's something that's making a bottom here. Motherson Sumi has had a dream rally. Whether you think the worst for this stock is over. And how would you read in Ashok Leyland? Because if you're looking at the monthly trends, month on month, there seems to be some bottoming out in the numbers.
To the auto players in terms of an MOM kind of a growth. Obviously, a YOY growth is still expected to be on a higher base for the last year, which means that the YOY numbers are still going to look very, very soft and tepid. For Ashok Leyland in particular, again, I think what has probably happened in terms of the axle load norms, the expectations of the changes that probably required on that front, along with the expectations of pre-buying, which will probably start in the second half of this financial year, I think that can be some supporting factors. In the interim, I think this demand slowdown that we have probably seen, the inventory level built up both at the dealer end and again the discounting factor in terms of the discounts per vehicle that still need to probably be given off to probably liquidate that inventory. I think we still have a say on the numbers. I think the LCV part of the market for Ashok Leyland is still holding up, and that segment of the market itself looks pretty strong. So I think anybody holding on can probably hold on to a stock like Ashok Leyland. But for the universe as a whole, I think it's going to be a very slow and gradual recovery. I think normalization is going to happen, but I think there are a lot of intermittent hurdles on the way. ABS, for example, that has got introduced, I think that is probably going to raise the cost for two-wheelers as well. And again, similarly is the case for passenger vehicles, where price hikes might be required in the second half as BS6 norms start getting rolled out. So I think within this space itself, I think we do hold stocks like a Maruti or Eicher Motors. But again, I think you probably need to wait in terms of fresh buys and wait for an opportune time to probably stagger your investments into the auto universe.
Okay, all right. Mayuresh, thank you. We'll let you go on that note. We request our technical experts to stay on for final thoughts. So it's closing out. Anuj, I don't know. Disappointing is a strong word, as you're saying, that, after a 1,200-point rally, one shouldn't be too greedy. But yeah, last hour, Quite a bit of selling coming in.
Yeah, I mean, a bit of an anticlimax. Profit taking. I think for one day you'll have to say that. Let's see. Tomorrow is another day, but the market still has unfinished business, Surabhi. So all-time high should happen. If not tomorrow, perhaps at some point in this run. That looks like it will happen, but of course it has to wait for some time. The bank Nifty has been cooling off a bit. In fact, that's been the trade for the last 3 or 4 days. There's some bit of money moving from banks into either NBFCs. So the financials, the non-banks have started to move, and also IT. So the banks, they have come off a bit from the high point. In terms of trade today, let's talk about the winners first, because it was still an up day. Tata Motors, fool's day or not, but 8% higher on that stock. Wipro was up 3%, Hindalco was up 5%, Tata Steel up 2.5%. Maruti had a strong run today, up 2.5%. Vedanta was up 2%. Reliance supported the market with 2% gains. And TCS towards the end, along with Infosys, Tech Mahindra. So IT did well. On the way down, Z Entertainment was a top loser, down 3.5%. UPL was down 3%. Eicher Motors, quite a bit of sell down for Eicher Motors, down 2.5%. IOC, Indus Ind Bank, Indiabulls Housing, Titan, Axis Bank, Mahindra and Mahindra. Quite a few losers actually in terms of 2% as today. All these stocks down 2%. So
well, on the mid-cap side of the screen, again, it's quite a climb down from the highs of the day. The index is up just 50 points at close. What worked today? We're talking Tata Motors on the large cap screen. Throw in the DVR as well. 8% up on the Tata Motors DVR, by the way. Triveni Engineering 7%, IRB 7%. Dish TV has had a good run, 4% up, and some last-minute buying on Dish TV, taking the stock higher. First Source has managed a smart surge towards the end, 4% up on First Source as well. Some buying on Graphite India, some buying on Lupin. ICICI Pru had another good session. And do watch out for some of the banks beyond the index. I mean, both on the PSU and the non-PSU side. Look at Andhra Bank, J&K Bank, South Indian Bank. Most of these stocks have had a run between 5% and 13-14% in the case of Andhra Bank. So pretty strong trends coming in. Let's pull up Andhra for you. That's South Indian. Andhra will just come up on the screen as well. So some of these financials, banks, have actually done pretty well. BOB in its new avatar manages to go home in green territory with a gain of about 2.5% as well. So those are the major movers on the way up. Now let me talk about the laggards. And here you'll find some auto-related stocks definitely coming on the screen. Let's start with Ashok Leyland and Escorts. That's where the disappointment was with respect to the monthly numbers. Escorts down 3%. Ashok Leyland, not that bad to be fair, because month-on-month trends are improving. Year-on-year, there's still a slight dip in the monthly numbers. SRF, good recovery from the lows, 2% down. That's how the stock has finally closed out. There's been a lot of profit taking, by the way, on some real estate names like Prestige Estates, DLF. These are stocks on the way down. Shriram Transport and Edelweiss. These are some of the financials, the NBFCs that have ended down today. So mixed session. And definitely a little bit of disappointment for the Bulls, which would have been hoping for a home run on Monday. That didn't quite happen. Let's get final thoughts in then. Ashwini and Mitesh are with us. Ashwini, given that people decided to sell down with no apparent reason, would you read much into this last hour at all? And what's the advice tomorrow?
Reasons are available on general news. On business news, going up is reason enough. I mean, if I'm 20 points from, all-time high, I don't need a better reason to do a sell-off. So that way, 8, 10, 12, 15 days worth of rally, I think that's enough reason. The problem often is that since morning, we all start, today is the new high day, this, that, and the weak bulls, the late entrants, they get in. And then they get rogered because everybody else is in. So my sense is you have to, every day in the morning I say, wait for a dip to build positions. If you build position at the highs of the day, what's happened with the, Bank Nifty will happen. So this is not now a market to take lightly, because chances are you will see very sharp declines intraday.
Okay, fair enough. Mitesh, how would you read the picture now and tomorrow? What's the advice? On the index, still think long?
No, I think today only I advise that you should get out. I think we've kind of booked around 11,700. I think hitting new highs, I think there's a higher chance and higher probability of markets facing supply and profit booking. So my sense is that I think we might be in for 11,550, 11,700, 30, 40 thereabouts as the broader range, and this could be more of time-wise consolidation with the moving averages also which have been left quite behind. We'll try and catch up in that time. So I think we are in a 200-point kind of range before we gather enough strength to get past the all-time highs. So I think that's the way forward. So I think buying on dips is the best if you're trading index.
All right. Okay, gentlemen, we will then wrap it up for today and we will catch you with the market again tomorrow. Let's see what the bulls have in store.